Our speaker, Dr. William Chu, is an lecturer of Department of Banking and Risk Management from Faculty of Business and Finance, Utah, which are located at Kampa campus. He obtained his Bachelor of Banking Honors from University Utara, Malaysia, obtained his Master of Science Banking from University Utara, Malaysia. The area of expertise for Dr. William is fixed income, money market, Islamic capital market, and also treasury management. All right, now let's welcome our speaker, Dr. William, to sharing today's topic. Welcome, Dr. William.
Hey, very thank you, very thank you. Please allow me to share my slides. So why digital? The facts about digital era are becoming familiar, but it remains astonishing. Computing's powers has doubled annually since the 1970s, and the cost has been fallen about the same rates. Every human's activity now digitally recorded. Facebook, Instagram, e-commerce such as Lazada and Shopee, and etc. More data has been generated over the years. The numbers of interactive devices is also increasing fast that require data, analytics, and the digital tools to harness them are transforming all aspects of life, including the business and industry with a significant implication for risk management. So digital is a new norm. We can't deny that. We have to accept the change and moving forwards, or else we will be left behind. So it transforms industries such as like media, transportations, retail, and now sweeping through the financial institutions. But when it comes to firms, which include the financial institutions, the risk functions a unique challenge and opportunity accompanied with digitalizations, or we call it as a risk elements. Numerous questions around the impact of digitizations on the risk function mandate, such as first, the role and organizations. It alters the organizational setup, how the way of working from traditionally versus the digital era. Second, the capabilities to develop with the established peer, utilities, startups, and others. In point 3 and point 4, talents and cultures, people combine a traditional business and technology knowledge, experience with the modern data, analytics, and the digital expertise. And the last, the way of working required to deliver a digitized risk functions to process a high volume of structured and unstructured data. The structured data means the data be in a systematic way, which it be ready and it can give us an output. But then once it comes to unstructured data, where in a simple or in a layman term, it means the data will be in a very messy, which is not in an organized manner. In that way, you need the digital to come in, or in a simple word, we call it IT, okay, to structure it out and give a meaningful output. So in terms of risk management, or if you ever wonder, what is risk management? In the layman terms, the word itself to you, managing the risk questions. How? Let me answer you shortly, so stay with me. As I go along, I will walk you through what's meant by the words risk management. Okay, back to the slides. Risk management, it can be defined as a fundamental to how an organization works in identifying, assessing, and controlling threat. The complexities abound because risk is deeply intertwined with a thousand of day-to-day strategic decisions of internal stakeholders, such as like business, operations, finance, and control control. On the other hand, external stakeholders such as like a customer and regulators. Therefore, digitization risk management and a process requiring automating multiple layers with several functions, which I will walk you through shortly. So, a world marked by a rapid change in the economy, finance, political, and social environments. A world ruled by uncertainty is subject to the emergence of increasing higher risks, affecting the process of economic developments of the world economy. In this context, the risk management can be considered as an art of taking decision in an uncertain environment on the background of the identifications, quantifications, analysis, and the management of the risk, which it affects the organization's operational. Why is necessary an active management of risk? The globalization process, the interdependence between the economy in the region and global plan, the problems arising from the need to ensure compatibility between a legislative provisions and the effects of the labor movements. On the economic context, the competitions at the level of participants from the economy circuits, the limited degree of the resources and unlimited of the needs to adapt to the technological changes. That's why we are here today for the webinar, technological changes. The challenges generated for the climate change, we can't run away from this hot topic now, climate change. The high degree of the complexity of the factor which influence the economics and financial result of the business. Next. Next, the diversity of the international economy flow are just some aspects which sustain the organized risk management, training the personnel for the managing the activity, identifications of the losses caused by the action of the risk, and the insurance of the resources necessary to cover them, but also in identifications and communications of the risk, the fact which require the existence of the strong organizational culture oriented to this sense. Questions, what kind of sense is this? The digitalization plus the risk management, or else we will be left behind. We are not in the era of 70, 80, or perhaps in the era of 50, whereby technology don't come into the existence. But then we are in towards what we call it as industry revolutions 4.0. Technology is the keywords, or we call it as a digitalizations in terms of the systems. So defining risk has been done in a different way over the several decades. But regardless of the angle of the approach, defining the border between the risk and uncertainty, the identifications of the management methods, a thing is certain, the existence of risk. So I hope at this point of time, I answer you, what is risk management? Therefore, in answering the relevancy of the risk management in the digital era, the importance of the risk management is even more striking in the current economic climate. A crisis which seems to be having just begun, COVID-19 pandemics. In these conditions, the necessity of the topic is obvious. The current economic condition sees the application of some specifics, technique, strategy to the risk imposed the immediate developments of the risk management, especially at the level of small and medium-sized entity. At the level of large company, it is noticed a considerable orientation towards the risk management, being created even different departments to exercise an active management at a different level of risk. The analysis of economy financial performance, it required taking into consideration the risk factor as well, not to forget that, and the possible implications on the profitability and the financial stabilities. At the level of any economy, it cannot be discussed about the existence of some investments. Estimate return does not coincide with the actual, especially the traditional method in managing risk. Therefore, in the era of digital, or I would rather say, Industry Revolution 4.0, as I highlighted earlier, an analysis of the profitability and the manager should focus his attention on potential risks, such as the current global pandemic, COVID-19. So in addition to estimating the expected future return, is imposing also a quantifications of the risk associated with achievements. Profit variability may involve achieving a lower return than expected. Higher profit variation range is, the riskier the investments. Therefore, the profitability, the risk trend analysis provide a better classifications of the investment opportunity with the help of the digital or the technology. So, putting in the digital and risk management together, or I will rather say, how do we integrate them? Looking at the digital risk transformations now and in the long term, it changed the organization view, how it handle and face the risk in a modern economy. Precisely in the Industrial Revolution 4.0. Instead of reactive recruiting through the traditional way of doing things, the integrations provide insights and recommendations for organizations, supervisor, and fintechs. So I hope you come across the word fintech, which stands for financial technology, such as like touch and go e-wallet, or I would just rather say e-wallets. You got Boost, you got touch and go e-wallets, etc. and etc. So on the best course of taking into transformation the risk functions. Bill Gates once said, let me quote, we always overestimate the change it will occur in the next 2 years and underestimate the change that will occur in the next 10. Don't let yourself be lulled into inactions. So, and I unquote, so moving forward, and action is a key to survive in a digital era. In this webinar, I will walk you through 3 questions in answering the digitalization and the risk management. First, how to embark on a transformation that digitize the risk management functions? What are the elements of the digitalization risk management? Third, what impact such a transformation will have? So in answering the first questions, embark on the transformations, it required an organizations begin their journey by setting an aspirational vision for the functions. The vision should, in particular, or articulate risk mandate and a role. It should also define a top-down operating model for risk within the digital of the futures. The most importantly, it should not only offer inspiring message, but also define the ambition precisely. Defining a vision for digital risk, including a new view on the key activity risks will perform in the future, and in what way, the corresponding mandate and the role of the risk. And not to forget the metric that will be used in determining the success. Second, understanding the opportunity to find and prioritize the most promising avenues of digitizations. The philosophy always says a good first step is to develop true view of the complete set of the risk process, including the associated risk activity and risk discipline. Not to forget, as Bill Gates said, action to each opportunities. Nevertheless, one key insight, the organization should not wait for the perfect starting conditions before getting started. Often, they can take a significant step even while they are building a volatile asset and skill which can be added later. Lastly, running a swarm of initiative. The map should outline the work to be done in the data management and infrastructures. So the word of infrastructures, which it tell you the surroundings. You need the infrastructures, which if you put into the simple word is where you need the external force to support you for the changes. Or else, you have no effects at all, which it will affect the entire effort. So you need the data management, you need the infrastructures to be together. Not to forget that meet the strategic goals and capture the defined opportunities. Through a considerable approach to governance and operating model, and of course with the new techniques such as the digital factory, digital way in serving the customer, user-friendly platforms. So I believe most of you or all of us, we are in the era that we can't run away from the smartphones. There's a number of apps, colorful functions, or whatever that you can interact with. So we as an end user, we never thought about risk management because this is the function that we use to solve our daily problem or daily usage or whatever. But then if we stand from the, I call it apps provider or the organization point of view, all these things is to solve the risk, solving the risk, which is the risk management. One of it is very simple, the risk of losing the markets. Am I right? Why do firms improve? They are fighting for survival in this new modern economy. If we keep like looking back last 2 years or last 5 years, Facebook changed a lot of user-friendly. WhatsApps, for example, Instagrams, e-commerce platforms. So all this is to overcome the risk management with the help of the digitalizations. So one important finding from the research, risk must put in the place, put into the place to ensure the safety, such as running an old and new process in the parallel for a while and conducting a more back testing for new analytical approach. So we can't like straight away we have apps and it's 100% perfectly function. So over times, if we keep update and update and update, reason being why, which I just mentioned, the word parallel, running the old and the new parallel, conduct more back testings, which is the word digitalizations and the risk management, put it together. And the most thing, as I said earlier, the risk of losing the markets to the competitors. So in answering a second question in this webinar, what are the elements in the digitalization risk management? We have seen the 7 areas that need to be integrated in an organization for the transformations towards the Industry Revolution 4.0 with the digitalization risk management. So what are these 7 elements? First, data management. Over the years, or perhaps another 10 or 20 years down the road, data were getting bigger or larger in the size as comparing to 10 years ago. Look into Facebook itself. Comparing today and 10 years ago, how many accounts has been created, storing the data. Looking into the banks, accounts has been like open ups every day, more data coming. So all this data is a rich information which it has to be structured in a proper manner so that it gives an output and it gives a meaningful outputs where the firms or organization can be used. Second, process and the workflow automations. So the second element that we're looking in to integrate the risk and or I say risk management and the digitalizations. It's a process and a workflow, which is from one point to another point. It will be useless if, let's say, the apps or whatever software been designed and then it never reached to the end user. If it reached end user, then how the flow will be look like? Am I right? Third, advanced analytical and decisions automations. So now in an era of technology, digital, so on and so forth. So all this IT, we have this what we call machine learning. By giving in the raw data, throw in the data, and then it will generate you a result. Of course, you need the IT to have a programming. But then we are not in the programming sections today. We are in more on analytics. Analytics in the way that how do we play with the data and then it tell us, for example, consumer buy product A, it will increase product B, for example. So the risk is there, A and B product, they are together. So the risk of, if let's say you don't increase your B product, then people will stop maybe buying A. Risk management. So with this digital era and digital kind of IT things to help, then advance the decision making. Number 4, comprehensive, timely, and flexible infrastructure. You still remember a moment ago, I did mention the word infrastructure. You need a support from the externals. You need an infrastructure in the way that for you to work in this era. Shortly, I will walk you through what kind of infrastructure that we are looking at. Stay with me. Number 5, smart visualization and interface. So visualization interface like your apps that you're currently using, which I say colorful function, which attract you. And not to forget the virtual augmented, the VR, also one example of visualization interface. So moving forward, we are looking to more friendly user interface. Because as I say, there is no one apps or one software that you design automatically, it look like 100% perfect. So you have to go a parallel. So perhaps 2, 5, or 10 years down the road, it will keep improve and improve. Definitely based on the economy situations, the needs, and the IT advances. Okay. Next is the external ecosystem. So the external ecosystem here is about the linkage between one digital to another digital. For example, like your e-wallets or touch and go e-wallets linked together with major highways. Am I right? Or your touch and go e-wallets linked to most of the retail. You can just easily pay with your touch and go. This is what we call ecosystem. If the app itself is standalone, which end of the day you have a multiple or number of apps which you can't put them together, you can't link them together, then it looks like a very not convenience to the end user. Risk management come in. There's a risk, am I right? So as I say, moving forward, okay, they have this collaboration, all the systems together. Okay, next we have the talent and the culture. So end of the day, you still need humans. Okay, end of the day, you still need humans as in the back to support the whole ideas. Okay, okay, let me move forwards. Okay, let me move you to the each of the elements. So the first is the data management. As moving forward, an increasing volume of data, velocity, the variety of data need to be upgraded to catch up with the Industrial Revolution 4.0. Looking into the tables, data itself, which I just told you, increasing volume in a number of record capture, numbers of populations increasing over the years. We can't deny that. This is a statistic telling you. We have about 7 billion world populations. And we are moving forwards to the digital era. I believe you're not in the traditional whereby you're still using the old methods of doing transactions, am I right? So now we're talking about e-commerce. So as e-commerce, you need more data, more people open up their accounts. Large client base, we call it. Velocity is a speed. The pace of data captured and generated. How fast? It is not about the connectivity. It's about how fast the data can be recalled. The speed of data recall, which is point number 2, and the integrations among the branches. Variety. Traditional structured data such as payments and transactions. So remember earlier I did highlight the word structure and unstructured. Structure means data type in there have been structured in a proper way. Because looking in traditional way, we are using a record keeping, so everything is looked systematic. You just have to transform into soft copy or in a database. So the word parallel put together with the new product data, chart, transcript, and example. Let me give you one thing which I just recall. I don't know whether you do experience that or not. Or maybe later you can try to like explore. You try to search in the Google any products that you like. Let's say we search smart TV. Smart TV, whatever brand you like, you just search through Google Scholar, through Googles and so on. Trust me, in the next 5 minutes, you turn into your Facebook, you will come across a lot of advertisement pop up on this smart TV. This is what we call welcome to digital area. Okay, welcome to the digital era, sorry. Okay, because remember the word risk management. The risk management that you're looking at is not to losing customers. Try to remain you and make you more convenient. And the another example that I can give it to is where you try to create WhatsApp groups. And then thereafter, you have a few friends, you try to chart one product. Maybe you try to chart what kind of time phone is the best in the markets. Believe or not, next 5 to 10 minutes, you go to your Facebook or you go to your Google, this all handphones product will pop up and it tell you a lot of things. Okay, this is what I mean by variety. Okay, moving in a parallel world, traditional data, putting it together with the new data. Okay, can I? Okay, let me move on. So the risk functions need to have a robust approach to use and management of the data to ensure the appropriate quality in support the risk decisions. Overall, it will improve the quality of the data, make the risk management and business decision more consistent, and ensuring a responsiveness to the risk data needs. The past studies show the new data source will have a high impact on the work efficiency. Second elements, process and workflow automations. Through a robotic process automations, it can combine several of them into a smart workflow and integrate sequencer performance by a group of humans and machine across the entire journey, which remember earlier I told you how the whole ideas or whole things that apps or software, whatever, moving from one point to another point. Definitely you need a group of humans to do that, include together with the machines. The machine here is referring to the technology or the apps or something that means design software. So technology can reduce the needs for manual intervention in the key risk activities by reducing the numbers of error and the process times. Nonetheless, to achieve a greater efficiency, smart workflow, and timely experience for customers. Moreover, automation technology is not a new thing. Many risk functions are still far from maximizing its potential and reaching such level of improvements. In the past study, it showed 90% benefit from increasing precision and 55% believe automations will improve complying with the regulations. Third, advanced analytics and decisions automations. Sophisticated risk models such as like machine learning algorithms. So I don't know whether you've heard before these machine learning algorithms. We are moving to that directions, Industrial Revolution 4.0, where we put in a commands, or in another way we call it a technology language, technology language, where we can teach the machines. By teaching is where not basically a face-to-face teaching, it's where we're giving a command, okay, and some kind of a IT language or whatever, and then you start to learn on its own. And we call it the algorithms. So you can find a complex patterns, such as a set of transactions, indicative of invoice fraud, unusual patterns, or make more accurate predictions of default and another risk events. Do you ever thought about, like for example, like e-commerce, we keep buying the same thing over again, right? The product will keep always pop up whenever you log in. Why? This is the machine learning algorithms. It has been designed in that way to study your behavior. So it know what you want. So sometimes, I mean, those have no IT background or this risk management or digital background, right? They'll pop up later, hey, how come they're so smart? They know what I want to find. Or maybe in like a Google searching, right? You only type A, then straight up the possible thing that you would like to search. This is all machine learning algorithms. Like I just said, to track the patterns, to look into any kind of transactions has been done. And by looking to this, right, the risk management can be like minimized, which is to retain you and make the customer or end user more user-friendly. So a new model with the algorithm can be expand the range in 3 ways. Advanced analytics can handle more decision types. Yeah. Second, analytics user can wider variety of algorithm, more powerful machine and rich data set. So back to point number 1, so handle more decision types. So it can tell you a lot of things. So you put in the machine learning, then get a lot of things about, let's say, me, Williams. And then this algorithm is very powerful in the way that it will generate more output. Okay, which is like doing a forecasting. Third, advanced analytics can be surface a new type of insight in the accessible formats. Okay, buried in the accessible formats. So you see, sometimes, right, data is stored in a different format. We have a numbers, we have a ratio, we have a percentage, we have like ABCD, which is like sentences. So all these things, right, if you use human to analyze, so it takes times. I can't say it cannot, it can. But then for human to put in numbers, ratio, percentage, wordings, or sentences together and tell, hey, how these people's characteristic look like. So by the time you finish analyzing this, right, most probably the things we run away have been outdated, or maybe you are out of times. So we call it as a risk. So we want this digital to help us very fast, maybe like a second or in a minute, it tell you, oh, okay, this is the outcome, so we have to focus on these parts. So digitalization, it can like, or we call it as this analytical, right? It can like combine a different type of formats of data into one and then do an analysis on this. Okay. So next is a cohesive, timely, and flexible infrastructure. So looking forward, the risk management in the digital era is the risk infrastructure. It needs to be support and innovative data storage solutions. New interface, easy to access to the vendor ecosystem, and so on. So all this to ensure a high standard of quality data. Infrastructure is the most basic offering provide user with a computational and storage capacity, such as like a Google Drive, clouds. For examples, do you ever heard about that, Google Drive? Comparing with a pen drive, okay, you can save the data and then bring with you. So what are the risks involved? The risk of losing the pen drive, the risk of the pen drive may be malfunction, maybe you're exposed to a hot weather or rain or whatever, or the pen drive may be like stolen by someone's. Am I right? So now we're looking into the more advanced drive, cloud. You don't have to bring the pen drive over from one point to another point. So this is what we call infrastructure, a support from the external. So imagine if, let's say, we don't have this kind of drive or whatever. So any transaction on apps, let's say, for example, you have to go through the server, then it takes time to process and come back to you the outputs. So now everything can be solved in the middle server or in the center server, drive, for examples. In fact, the drive itself, in terms of space, is a very big space compared to a small pen drive, or maybe perhaps the organizational or the firm server. Okay, okay, next, next, element number 5, smart visualization and interface. So risk will deliver its insights, interactive and personal way through the risk dashboard, augmented reality platforms, or a customer or another interface. So smart visualization technology and smart interface allow user to access the intelligent business insight that customize the way how the thing is doing. The key technology behind them include the interactivities, dashboard, as well as augmented reality technology. Customers make up one critical group of users. We can't deny this. I repeat, customer make up one critical group of users because of digital visualization tool. It can help them better understand their spending needs or perhaps financing capacities. So a single app's repellence with the interface and functionalities could conceivably embed itself across entire customer journeys. So next, external ecosystem. So another element of digitized risk is assessing the external providers such as like a fintech, financial technology, utility, and the collaborations with a peer. Getting these relationships is a right of significant success factors because they can improve a solution. Remember, as I said earlier, we need an integration between numbers of apps, which I gave you an example earlier, plus payments with touch and go e-wallet, RFID, industry utility. For example, like now paying most of the utility bill can be done through apps. So some of the risk team has already used them to fight against money launderings, as well as your customer effort, third-party risk management, and the compliance with the Bank Negara Malaysia guidelines. Once the organization firms have considered the benefit and the risk of industry utility, they can generally establish it by transferring the existing platform from one to more and share platforms, partnering with existing provider or building from one scratch. Sorry. Okay. Risk will have a far greater share of the digital savvy personnel with a fluency in the language of both risk and the business. Many risk leaders think that their team will need to develop the skill rather than hire non-risk professional and expect them to learn. That's wrong. Talent is a major challenge vision of digital risk. Diversity of talent in the particularly the optimal blend of analytical and digital skill set to supplement the existing risk expertise. A diversity of talent in particular it process a decision of automators, which required an increasing analytical skill from the personnel. So in market rights, organizations are looking for a talent or a potential candidate to fill out a position such as a risk analyst, risk control consultant, risk management executive, business risk manager, and compliance analyst. Our new programs designed to cater the need of the market demands. The Bachelor of Business Administration, Risk Management, based in Kampar campus and offered by the Faculty of Business and Finance. You can check with the Division of Promotion and Programs for the further details. So the last question in addressing the future of risk management in digital era and impacts of transformation in the perspective of three parties here, risk executive, CEO and the head of organizations, and the retail and corporate customer. For risk executive, it will focus on more strategic and high value of decisions as a routine work is automated away and few exceptions require a manual handling. They will use advanced analytical capabilities to generate insight that are hard to produce today. On the CEO and head of business, it will automatically generate a strategic advice on a risk-oriented business decisions, such as like identifying origination opportunity, shrinking unwanted exposure, managing investment portfolios, and allocating the capitals. And lastly, retail and corporate customer will have an individualized experience that meet their high expectation, helping them making more informed decisions, anticipate their needs, and offer customized solutions. So as a conclusions, risk is uncertain and potential threat to the organizations. It can be potential factors affect the value and survival of business. So in this time of economy uncertain, such as now global pandemic, COVID-19, more corporations have added a risk management functions as an essential component, communicate risk policy and manage risk process between the organizations. So that's conclude my presentations, the future of risk management in the digital era. Well, that is all I have for today. Keen to know more about risk management, as I mentioned earlier, you can enroll into our programs, the Bachelor of Business Administration. In fact, this is our new program, the only one in Malaysia where it integrates the business administration and the risk management. So it's offered by the Faculty of Business and Finance, located in a Kampar campus. So that's all. So I pass back the section to the Division of Professional and Programs. Thank you.
Thank you to our speaker, Dr. William, to sharing this amazing information to all of you. I believe they learned a lot from you today. We got new program which called Bachelor of Administration, Honors Risk Management. So this new program is aimed to providing students with comprehensive understanding of risk management for financing and non-financial corporation. The core curriculum of it is analytical knowledge, operation management, legal framework, and strategy planning. The program balances between the needs of providing a student with solid theoretical knowledge, but include case study that parallel to current evolving company environment. So the duration of the program is 3 years, it's full-time, and the intake of the program is January, May, and October. The medium of instruction of the program is English, and this program is located at Kampar campus and provided by Faculty of Business and Finance. So the career prospect of the program is risk analyst, risk control consultant, risk management executive manager, specialist, business risk manager, compliance analyst, credit risk management executive. So here is the backup for our Facebook page and our YouTube channel. You may look back to the previous webinar and get the latest information at our Facebook page, Utah for you. Last but not least, today's webinar will be recorded at our official Facebook page and uploaded at our YouTube channel. So for further inquiry, you may contact us through WeChat, WhatsApp, and Facebook. Thank you for joining us today and have a nice day.